Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab and delighted to be with you today. We have Scott Thompson with us in the chat. I don't know if your ears were burning, Scott, but I taught the last class on long options and we did long calls with one ATR targets. And that is a strategy that I learned from Scott. So if you normally come to the Trading a Smaller Account class, you're going to want to watch that class once it's archived, because we did some example trades and we're going to follow up on those in that Trading a Smaller Account class. But moving on to technical analysis, I thought it would be interesting today because I'm seeing a lot of it out there on the charts at looking at trend reversal patterns and what creates a trend reversal pattern and how a trader might trade it. Okay. So that's what we're going to talk about today. I want to thank those of you who have joined us. We've got Scott Thompson with us in the chat, and he's certainly familiar with all the things we're discussing today. So if you've got questions, don't hesitate to type them into the chat. And to Tony and Jay and Robert and Sharon and Scott and Sharon and Eric and JDLMI and the rest of the gang, Josh and, these people I affectionately call the usual suspects. I love that you guys are so participatory in the chat. If you're joining us for the first time, please feel free to type a greeting into the chat so that we can welcome you. We link arms here every Tuesday at 2 o'clock Eastern and spend 45 minutes together just increasing our knowledge on technical analysis, which is really reading the charts and understanding how other indicators can help us either confirm what we're seeing in the charts or have a better understanding of what we're seeing on the charts. I encourage you to follow us on both LinkedIn and X. My handle on X, Barb Armstrong CS, and Scott's is Scott Thompson CS. Know that everything that we talk about today, and we're going to look at a lot of different charts, but it's all for general information purposes only, none of it to be construed as a recommendation or personal investment advice. If we look at an option strategy, just know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and hone your skills and make sure you understand your plan and how to execute trades on this platform. But there are some nuances and differences, and we'll discuss those as appropriate. Also, just, this is a technical analysis class, so that's where our focus will be, but know that there are other things to take into consideration, what's happening globally, like within our world, tariffs, the Strait of Hormuz comes, to mind, understanding fundamental analysis, being aware of earnings season and other major announcements. All of these things can impact our success as traders and can impact individual companies and their stocks. This class, we designed to be taught in about a 9-week rotation. And, probably once a quarter, I will start at the beginning of this rotation and we will go week by week all the way through. And then I'll take a few weeks where I'm just taking individual topics. Today, we're going to kind of focus more on these reversal patterns and how we, might, one, recognize them and then two, trade them. Okay, so that's what's going to be on the menu for today. And we're going to spend most of our time on the charts. So we're going to start with Microsoft and maybe just to put things in context, and this is a getting started class, so we don't spend a lot of time looking at the overall market, but just for context, we have the S&P hitting a new all-time high today. We have the NASDAQ hitting a new all-time high today. We had the Russell within a stone's throw of a new all-time high, and then the Dow hitting an all-time high. So it's pretty hard to be anything other than bullish. And if we want actually our first example of a trend reversal pattern, we needn't look really any further than the Dow. It's not absolutely perfect, but there are some that would look at this and see, let me just bring up my drawing tool here. You know, that we had this big pullback, and I'm sure most of you will remember that. And then it came up and came back again. And we call this a cup and handle pattern. And so the way a technician might measure this pattern, they might say, well, this has gone from, say, 451 to 502. So, you know, we have about a range here of about 51 points. And so if you wanted to put a target on where you think this might go, they might say, well, I'm going to add 51 points to that 502, and I'm going to make my target on this index to be 553. And this is one of the ways that a technician will use a pattern like this. So Chris, you're absolutely right. And Michael's asking if this is being recorded. Yeah, we teach over 30 classes a week, and all but 2 are archived on a regular basis. Now, every once in a while, there's a technical hiccup, but there are 2 ETF classes, one on Monday afternoons and one on Friday mornings at the market open, and everything else is archived. And I'll show you where you can access those. But Scott has also put in a link to the playlist for this class. Yeah, and somebody's saying, gee, the chart doesn't even go that high, Scott mentioned. And you know, if I wanted it to go that high, could I? Yeah, you just come out here and we'd come to our price axis and we'd say, you know, we need more room to the upside. And so it kind of will squish my chart, but then I could see that 550 on the chart. And is it possible? Anything's possible. But you know, it doesn't mean that, hey, for sure this pattern happened. And so for sure this is going to go that way. Like if we look at Walmart, for example, so we had, you know, a similar-ish type of pattern on Walmart, didn't we? Where, you know, we had this come down, and then, you know, it kind of like, it's like one of those fancy cups with the 2 little handles, but, you know, basically a cup and handle, and then it broke out. And one of the things that I say with any pattern, whether it's a diagonal resistance breakout or this horizontal breakout, you may want to wait for it to come back and retest and make sure it's a breakout and not a fake out. I had a friend in the industry who used to say, let it cross the river and come back and test the ice. And then if it bounces, you know that this horizontal resistance line has now become a support line. And in fact, with Walmart, that didn't happen, did it? It wasn't a breakout, it was a fake out, and it came all the way back down here. And, you know, I was waiting for it to bounce. And when we look at, just let me zone in a little tighter, and I have to close my drawing tool for this. This is one of those things where next week we're going to talk about candlestick patterns. And when you get a candlestick pattern like this pattern here, this pattern is called an inverted hammer at a support level. And what that says is it may have found support here. This support may be holding. And notice I used a 3-letter word, may. Because it's come down to you know, where it has come down before, a previous support level, but this candle requires confirmation. And the confirmation is that it closes above, you know, that it closes above the next day. Now, the next day, what do we get? We get inverted hammer, we get a hammer. And this pattern also requires confirmation. It says, you know, wait for it to close. You're looking for it to close above the high of this low day. And that didn't happen. And in fact, this support level didn't hold, and it kept going down. And sometimes we see these candle patterns and we think, oh, this is looking good, I'm going to go ahead. And if you want to do a little bit of binge learning, I said I'd show you where to find the, whoops, sorry. So let's come over to Trader Talks. I thought I had this up already. We had a little technical hiccup. So when you first come to Trader Talks from Schwab Coaching, if you haven't subscribed to this channel already, you'll want to do that. The first thing that comes up is what's currently being taught. If you come to the playlist and you come down to these mini sessions, now these are also in the Getting Started with Technical Analysis playlist, but in this one, we've grouped them all together. So you can look at this, what is a hammer? What is an inverted hammer? Those are the two candle patterns I just pointed out. And it will tell you whether this requires confirmation or not, according to the technical analysis experts. I'm not the one that made up these rules or these guidelines. I'm just sharing them with you. Okay, and these are all kind of in that like 2 to 5 minute time range. Alrighty? Alrighty. Okay, so let's go back to Thinkorswim. And so I thought we'd look at Microsoft. And this is a company that's been around a long time. It's a heavy hitter. It has a lot of influence on both the S&P and the NASDAQ. It's got a huge market cap. And what candle pattern, or what, price pattern do we see here? Some might again call this a cup and handle. And even if you look at this as an inverted head and shoulders, but it did come down like this and then come up, and then it came and broke again, so cup and handle. Some might have drawn in, and it would be a little sloppy, so not quite as direct. They kind of said, well, I see maybe an imbalanced inverted head and shoulders, but both patterns measure the same way. And by that, I mean, and then we had this breakout. So that's a good sign. Now it's coming back to retest. So you may say, well, across the river, coming back to test the ice. But do we have confirmation yet that the ice is going to hold? We don't. And so what do? Some traders might say, wait. You might say, I don't like waiting. Waiting and patience, that's all highly overrated. Well, it can save you, a lot of money in the long term, being patient. And then if it goes up tomorrow, you may say, I should have placed that trade yesterday. I could have gone in at a lower price. Yeah, but if you're following these technical analysis guidelines, it's saying, okay, we have a range of about 76 here. If this comes back and then bounces, where might we put a target? Well, we might say, I'm going to take that 76, and I'm going to, when I do put my target in, it's going to be around that 509 mark. And then what we may want to do when we look at it breaking out, we might say, well, where could we see it, butt its head up? And what I mean by that is, where did we see resistance before? Here around 483. And then again, around that 490-ish. I activate this, bring it down a little bit. It spent a week kind of bonking its head here around 488. So you may say, well, rather than making my target 509, or you may just want to be aware of these and still leave your target there, but know that, it take a couple of cracks at it to get through these. So what might we do with this one today? We might say, well, we could do a couple of things. We could put in a conditional order and say, if it goes above 453.50 by $1, so today's high, if we get it moving above the high of this low day, we could place a trade. But is that a set it and forget it? No, because what if it pulls down for another 3 days? And then it turns out instead of getting in at 454.50, we could have gone in at, 435. So, you may just say, well, I'm just going to leave this on my watch list, and continue on. Now, let's look at Take-Two Interactive. Now, Take-Two Interactive, if you're not familiar with this company, if we come to the Analyze tab, it's part of the communication services. But, so when we look at this again, do we have this similar pattern where it kind of came down and then we had a double bottom? You may have thought, and this is where it requires patience, right? Because then, like, it was flirting with breaking out, but did it break out? No. You may say, well, then we got this little, double bottom followed by a cup and handle. It pulled back a little bit, had another crack at this resistance line around 219. And, this line that I drew says 219.41. But really, this is a range. Support and resistance are ranges. They're not finite numbers. And then it finally broke out. So we had a breakout here. It came back to retest. And then it broke out again. And it's now back retesting again. But, and it's flirting. I call this, it's flirting with this resistance line or support line, if you will. But, it broke out and came up, came back again today. So could we put in a conditional order here when it's right at this resistance level to say, hey, the high was 224. If it goes up, $1 above, and this is a nice round number, if it hits 225, then get us in. Or so Chris is saying that it missed on earnings. So what you may want to do is do a little bit of analysis. And, before you decide whether you want to add this stock to your portfolio or not. But if we wanted to do an example of a conditional order, this is one where we could come in and say, well, if we were going to put a stop loss in, where might we put that stop order? And we could say, well, here was our recent low here at 216.40. So if we went, and you could go 3% or you could say 2%. So if we chose 2%, we'd put our stop at 212.07. So that's just kind of down around here, and it's saying, well, it's not going in the right direction if it comes back this far, and we'd like to get out. Now, so what we're attempting to do is define our risk here. And then do we put a target in? Well, we could, or we could just say, we just like to add this to our portfolio, and treat it as a trend trading growth stock. Or you might say, oh, or you could say, I'd like to do this as a swing trade. I'd just like to trade it back up to the previous high. So if I buy it at 225 and I get out at 245 and I can make 20 bucks a share, I'd be happy with that. And so you could do that as well. And then you're not looking at it as holding it as a long-term investment. It's a shorter-term growth strategy or income strategy. And your target would be based, again, on the technicals on the chart. And so if we wanted to set that up, how would we do that? Well, we'd come to our trade tab. We're going to right-click. We would buy custom with an OCO bracket. And we're going to say, we only want to buy this if it goes above 224. So we're going to make this conditional. We only want to buy if it goes above 224. In fact, we want it to hit 225 or above. So if it goes above 225, then we're in. And then we're going to put our exits at 245. So that's basically a swing target, the previous high, and our stop would be at 212.07. So let's say you're getting on a plane this week. I happen to be going to San Diego. We have a 2-day event coming up. So if you're there, please come up and introduce yourself. Ben Watson will be there. I'll be there. Kevin Horner will be there. We would love to meet you. So if we're buying 100 shares, that's about a $20,000 position. And we're putting in both a target to say sell it if it goes above 245, or if it goes below, this is a stop market order at 212.07. So if the stock were to gap down, we might get out at a lower price. So it could be a bigger loss than what we were expecting. And we only want to get in if it's above 225. And so we're risking about $13 a share. And with the anticipation of making about $20 a share. So it's a greater than a 1-to-1 risk reward ratio. Okay. And so we are going to put this in our stocks with targets group. Okay. And this is a conditional entry with a swing target. So the target is basically the previous high. So we're going to set that up. And we're not going to hear a little ping with a fill because we put in a conditional order. So let's look at a couple of others. Workday. So Workday, this is kind of like our GTI or Rigetti. So, it teamed up with Humpty Dumpty. It had a great fall, rolled all the way down the hill. And then, all the king's horses and all the king's men have been working to put this back together again. And it's like some might just say this has been a range bound stock because it's been trading between this like 112, 113-ish and, one and 133. I'm just going to come back, sorry, here to our price axis. And we don't need this to be quite so far up. And so like if we look at this and we say, okay, we have a bit of a, I'm going to give us some room at the bottom here. We're going to go 10 and 10. And then I can just spread this out. So when we look at this and we say, okay, it's been range bound. At what's our range here? It's about $20. So we have a range of about $20. So we could say, well, our target would be maybe 153, 133, 153. And so this might influence the type of trade you want to do. So, and some might look at that and call it a triple bottom. Triple bottom turned into a cup and handle. But it's the net of it is it's been consolidating for months, for the last couple of months. And then it broke out and it's pulled back. But again, today is the first day of the pullback. It could continue to pull back for a few days. And so we might just say with Workday, you know what, we're going to give it a hot minute. And we can come back and say, you could create a watch list of stocks to watch. You might give it a handy name like stocks to watch, and then you're going to go in and every day just look to see, do I now have an entry? Do I have a close above the high of the low day? Has it come back to retest and did it bounce? So in trader speak, some people call that a hold, close above the high of the low day. But for this one, we see the potential setup, but it's pulling back and the pullback may or may not be complete. So we're going to hold. And we recently had an earnings on this too. And so a quick and easy way to look at the earnings results might be to come over to your gadgets, and I tend to have live news up and I link it to the chart. So then you could come down here and say, well, how are these guys rating this stock? So UBS raised the price target to 140. It's already at 146. Jefferies raised their price target to 140. Goldman Sachs to 151. Daiwa to 170. What I tend to be looking for more than the number, I'm looking for, are they raising or lowering? So Goldman Sachs lowered, Capital One lowered, and then Daiwa raised their price target. And so I just find it interesting that this is what these guys do for a living. And I'm looking at price targets from 140 to 170, and some are raising and some are lowering. So there's a lot more indecision as opposed to looking at a stock where everybody seems to be in unison. And so that's something that you may want to take into consideration as well. Okay. So that's workday. So you may just want to, kind of keep that on your list. Now, I mentioned our GTI, and we did a trade on this in our trading a smaller account class yesterday. And again, what sort of pattern are we seeing here? I'd say kind of a cup and handle type pattern. But it's this pattern of consolidation where we've gone from 12.50 to 21.50, so about $9. You may say, well, that's not as much as some of the others, but like this is a $26 stock. Like $9 is a big move. So if you went from 21.57 and added $9, that would be 30.50. And if it's at 26.20 and you put in a target of 30.50, that's still a $4 move, which on a $26 stock, if I take 4 divided by 26, that's still a 15% move. Now, we could see some, we had resistance here in the past. It's interesting to see, is that where it kind of got slowed down a bit? Let's look. Well, it blew through that. It blew above this, because this I would have put the line, if I'm going with the previous line, I would have put that line more like here. And, it looks like it may get above that. And then we had a previous high here at 30.21. You may come out and look at the 1-year chart. So this stock has been as high as 58.15. It may never see that again. But, when we look at this, we've seen since it broke out, we've seen a lot of momentum on the volume line. So, before the breakout, it was trading like 22 million shares, and then it went up to like 148, 200 million. Like even today, which is a lighter day, still 50 million shares, like if we come to the trade tab. And so, this one has broken out. Now, I have done an example trade in trading a smaller account, but we could do an example trade and put that target in here. And have we missed it? Like some might say, well, we missed it. Look at it. It's gone up too much. Like, from this low here, it's probably doubled in price, because that was around 12. And where is it now? It's up over 100%. But does it have the potential to move more? Well, it could. And then, we had an earnings on this. So it came in kind of close to the estimates, maybe beat a little on this. And again, you could come out and have a look and just see, if we're trying to go back. So this is Rigetti, revenue beats estimates, monthly returns hit nearly 40%. So Mizuho lowered their price target to 27. I'm not seeing Needham reiterates it at a buy with a price target of 31. The other thing, and this is getting started with technical analysis, but when we look at the number of calls, which indicates whether something's bullish or bearish, and I've pointed this out a couple of times because I just thought it was kind of fascinating. And this was Kevin Hinks, who is one of the network personalities. He just said, when we look at the option statistics, there's a lot more calls being traded than puts. And some might see that as a sign of bullishness. And so, you know, something else to consider, and this would be considered, we've got the breakout. It pulled back for just 2 days. Then we had this close above the high of the low day. It kind of pulled back a little again. Some might say it's setting up a little bit of a pennant pattern. And some might just expect this to continue because we had a high here and, this is a higher closing high. So if we wanted to do a trade, in this account, we put our target here. Where might we put a stop? Well, do we want to go all the way back to here? We're taking a lot of risk if we do that. And this is where, like, we want to give it room to move, but we don't want to get nicked out if it just pulls back for a day or so. So maybe we take yesterday's low at 24.05 and say, hey, if it goes 3% below that, maybe we would exit the trade times 0.97. That would be at 23.32. So where is that on the chart? $23.32. Sometimes it's nice to see these things visually. So if you say, well, does that make sense? Or maybe you want to go here, because when something gaps up, halfway through this candle can be considered a support level. And then the low of this candle can be considered a support level. So if I take 22.66 times 0.98, that would be 22.20. Now that's another dollar of risk that we're taking for every share that we buy. And if we're putting in a target of 30.50, we're risking $4 to make for about $4. And so these are all things that we want to take into consideration. But if we wanted to do that trade, and in this account we can risk about $2,500, that was half of 1% of the original 500,000 we had in that account. Now I added money to it so we could place more trades. But if we come to our trade tab, we could do about a $25,000 position. So we could buy custom with OCO bracket, and we could do 1,000 shares here. And our target would be 30.50. And our exit would be 22.20. 22.20. We're going to make both of these good till canceled. And so our target on this, so this is a trade with a target, and our target is based on our cup and handle pattern. Yeah. Okay. So that's that one. Let's look at Akamai. Now, this is a different type of breakout pattern, right? Because we had something that gapped up and then kind of pulled back. So this is a pennant pattern. And this was one that was on our list yesterday, but we didn't get to it. And it's really had a pretty dramatic move yesterday or today. But we're seeing this pennant pattern with a diagonal resistance breakout. And this one is more of a continuation pattern, if you will, because it was consolidating and then it gapped up, kind of caught its breath, and we saw it pull back a bit. And if we're waiting for this breakout to see which way it breaks out, it started that breakout on Friday and then continued to move Monday and is really seems to be gathering steam today. How about PAYX? So this looks more similar. Like Paychex has been just on the struggle bus. I mean, this is down. It's got to be down, what, 50%? 47% from this high last summer. That's a long, fall from grace. And then we saw this kind of double bottom basing pattern, and it's now flirting. And this is, it's not a very highly technical term to say it's flirting, but that's kind of what it's doing, isn't it? We have this double bottom and it's hitting its head, but it hasn't really broken out. And remember, support and resistance are ranges. So we may just want to keep our eye on this one. And if it starts to go down, if one trades options, is there a way, like if you own this stock and still owned it, you might say, well, if we get another bearish candle, maybe I sell a covered call and then buy it back when it comes down here. Or so yeah, so somebody's saying, is this a bearish Harami? Oda, I like the way you're thinking. Yeah, this can be construed, although this candle has a white body because it is now trading higher than where it opened. It's still, down almost 2% on the day. Yeah. So, that's a pattern that isn't complete. Like it could end up being a triple bottom, or it could be setting up more of a cup and handle, or it could break out tomorrow. Now, team, here's, and here's one which when you look at it, we've got price targets here of 130. We've got Macquarie lowered their price target to 130. BTIG raised their price target to 130. We've got price targets at 110. It's already at 108. So, you may want to read some of these articles by clicking on them. But again, here's another pattern where, we have this cup and handle. It seems like we're seeing, a lot of these today, which is why we decided to talk about this topic. So this cup and handle with a breakout, and then it's coming back to retest, but what's missing? We don't have that close above the high of the low day yet. And so we could put in a conditional order, or we might just be patient and wait. Right? So, this is really the topic that I wanted to go over with you today, both recognizing when there might be an entry on one of these basing patterns or these trend reversal patterns, like a cup and handle or an inverted head and shoulders, and when there might be a sign that an entry might be coming. And if you trade with discipline and consistency, as frustrating as it can be to wait, having a trading plan and following your plan can be really helpful. And there's a bunch of example trading plans in that trade management mini session collection. And you're, welcome if you scroll past all those short videos on trading patterns, on candlestick patterns, you'll see those example trading plans there. And I'll be adding to those over the next couple of weeks once I am back from San Diego. So, guys, that's what I had to share with you today. I want to thank Scott Thompson for his efforts in the chat, the guys behind the scenes who, make this all look polished and professional, and to each and every one of you for continuing to show up. Um, my ask as we wrap things up is that you hit the like button. It helps move this up in the trading algorithms. You follow us on X, Scott Thompson CS and Barb Armstrong CS. Go over and find us on LinkedIn as well. And then don't forget to subscribe to the channel. Just to recap what we did today, we bought some shares of Rigetti. We also put in a conditional order on Take-Two Interactive. And then we looked at several other examples that have these basing patterns and may have even broken out, but we're looking for more technical confirmation before we consider placing an example trade. So guys, thanks for joining us. Up next is swing trading with Mike Fairborn. So stay tuned. There's lots of good stuff still to come your way. Bye for now.